Hey, welcome to September's 25th, 2025 Principal Profit Trader Coaching Call. We're going to share one of our screens here and we're going to get right into it. So, as you can see, as I was warning everybody in the channel, um, when we eventually broke this balance here, right? It's a week-long balance. We were now going to be in a larger time frame bearish pattern. The bigger picture pattern would be a balance breakdown pattern. Okay. And it qualifies as a bigger picture because it's at least a week long. That means it's an intermediate time frame. It's like a week and a half or so. You can count the days, right? This isn't like, and also it's not just the time, it's the magnitude of the move. We went from, you know, around 115238 all the way down to 111768. That's a substantial move. Now, I know previous market behavior influences market behavior, but if you look at that from a beauty principles perspective, it's not really certain as to if it's going to hold or not. I mean, the previous time it didn't hold, right? It bounced up from it and then broke down and crashed through it, right? The time before that, in late July, it did hold a support. So you can't trust this. And also the way that it got down there was very bearish. You can see that my warnings prior to that were not like, oh my God, we have to go long. It's like, what will probably happen is we'll have a pause day or two. And then once it gets up to that resistance zone, that's when I was giving short signals to everybody so that we could short the zone. Now, the mistake that I made is that I got in early, and then the energy of the loss of it ahead of the zone, which is a violation of the rule, didn't, and also some personal things that I'm going through, which actually invoke a rule that I'm not supposed to trade. So I was on a winning streak probably till I did that. So that's probably one of the reasons that I was excited and got into the zone because the rules to wait for the zone. Now, the zone did work out. So the thesis was correct. My execution was less than perfect, right? Great traders quickly recover from mistakes. I'm a great trader. My thesis was awesome and correct, and I'm going to keep going because the system is awesome and pure. Because if you look at the daily chart, once this got up here, we had this moving average cross, right? We're going back into the energy now of the balance breakdown pattern. That's why as it was coming down today, I said, guys, if you're not short, do not go long because now we are going to be in the leg count of the daily call, which is the second leg count down because I now have flipped the larger time frame bias to bearish. It was bullish before that. That's why I'm going short. Oh God. See, psychology is representation. And if you are in, and if your representation does not manifest well, do not go into the psychology of trading. One of the major mistakes that investors and traders make is that they try to write in their journals to get confident before they have a strategy with an edge. And then before they actually have this experience in the market to prove to themselves that they can do it. Now, I kind of went on that flow because I'm just thinking, when an archetypal crisis happens in your life, you have to stay out of the markets in terms of adding on risk because you don't know what happens when the reptilian brain gets invoked. You might do uncharacteristic things like jump into a zone. Now, this zone, right, was just simply an interesting spot on first test, but now that it broke, it could get very bearish, right? Second leg count down, pop up, right? I'm not even going to draw a zone on this inverse head and shoulders pattern. Obviously, we'll know it's a key swing. This is really the main zone that I'm looking at. It would then be in alignment with this dog leash principle that we revert to moving averages, and we can watch how they behave around there. You don't just want to look at them mechanically just as support and resistance. That's only one category in our daily call probability calculation scale, which everyone gets who's a paid member in this channel. It's part of our system cheat sheet. Now, if we look at the market today, one of the other weights that when I woke up and warned everyone not to go long today and to just basically hold a runner if you were short is that the other markets were heavy, right? The intraday bias, being who's in control of the day, were the bears, not the bulls. And if you look at how the price action was lower lows and lower highs, so that was a sustained momentum down. That's bearish. So one of the principles is not trading is trading. So we didn't trade today, so we didn't lose money. So everyone who's just a huddler just got smashed. Everyone who's a huddler that didn't take my signals when I warned everyone to take half off on Bitcoin, Ethereum, and SWE when you hit those majors is now whatever. And I'm sorry if I'm a little harsh on huddlers. There's no one specific that I'm going at other than the old me who used to huddle blindly on hope and has been absolutely rug pulled on these Elon Trains high rollers channel. What a horrible experience this has been being part of a lawsuit now with LTO. It's only emboldened me to even go further and see the truth in these principles even more beyond a shadow of a doubt. Like what we have synthesized together here, Principal Profit Trader with Kobe's huge impact and input into the daily call system and what I've added to it with my experience with multiple time frame alignment and bigger picture by all the things that we talk about is really been able to see truth because it's giving it out willingly and you can even see how it's even better than my execution of it. So that's why state is at this point the system is very easy for me to just give the zone. Like if I had 100 people in the channel and I'm just telling people where these zones are and what to do there, and you just had a little bit more discipline than me to wait to it, because I might get excited because I got a broken hand and I'm dealing with an issue. I didn't even get into reason why that happened, and I can't. So I'm dealing with a huge cortisol release. So my reptilian brain is super activated, and I'm not able to be patient enough to do what I know I need to do. Everyone knows what to do to follow a diet to lose weight, but you have to have the other factors in place to have the discipline to do it. Discipline is built in this game on consistently doing the things over and over again and calling yourself out on these mistakes. That's why the qualitative tab in your journal is so important. What did you do well? Well, what did I do well on the day when I got stopped out of my early short because it went 1% tick behind the zone, and I was like, whatever. And then went for a walk, and was out of my element for a bit. So it is what it is. You just got to you just got to get it. So today, one of the secrets was not to go on a lower time frame and just fade this double bottom thing that really wasn't a double bottom intraday, right? I mean, so the really edge, if we go on those lower time frame, is that you need to have like a wide double bottom intraday, right? So this would be a wide double bottom intraday, right? Right here. Right. This one is just first test of an awesome zone between these two prices, which, you don't even have to have a resting order here. Once it came up here, that was a nice high edge. When you have a volume spike, when you have an added edge for exhaustion, especially when we know what has just happened. We've just had a larger time frame bias shift where we know the short term and the intermediate term bias is down. The only reason why longs can be considered at 1110,633 and 11125 key reference area zone is because the market structure is so intense there. It has very low odds not to have some responsive buyers there. Basically, the short sellers are covering. Okay. At the same time, that does not discount the larger time frame bias magnitude, such that when we get to initial resistance, like I gave yesterday, right, that you can't short somewhere in the zone. Now, I always say the back of the zone has the best odds of a reaction, because if you can wait and have the patience and be okay with missing a move and put a resting order at the back of my zone, even without watching the top building. Also, this was later in the day, right? Then you can move it back 1.5% to 1%, and you could get it even beyond the previous zone or in the next zone. It has way better odds to quad exit out for a tradable reaction down to the VWAP, and then you hold your runner. Now, what the mistake that I made yesterday is that due to my circumstances and my fight or flight being activated, once this pattern, which was very bullish intraday, the other markets were up, right? This is an intraday V pattern. So it was like reversed like you got to imagine how does everyone feel today? Well, the bulls are really in control. All the bears are crushed today. So when it came up to initial resistance, I didn't wait for initial resistance, which is at 113,386, 113,746 key reference area. What I did was I faded the high extreme of day ahead of time based on maybe jumping in a little early on yesterday's high of day. So yesterday's high of day up here is close to this zone, which is based on, if I go back in time on a larger time frame, you'll see confluence there, which is multiple touch points through time. It's such that it's a key reference area where buyers and sellers have a lot of at stake there. So something good's going to happen one way or the other. It's important. So what I was betting on is this would go sideways for a couple of days. Once we got to initial resistance, this thing was going to short down and maybe even have a huge move down. So it was a nuanced thing. But once I took the loss here and have a personal issue going on in my life, my energy system to execute the system was shot. I went to bed and I saw like, oh, it's up at your zone. I'm like, just short it and put a zone up there. I'm like, well, I'm already in so much emotional pain. I don't think that I can handle a loss right now. But that's not what the system says to do. The system actually told me not to jump in ahead of time, wait for my zone, and go in if you have best odds against a momentum day at the back of the zone. Why couldn't I execute it? Because once I saw this top build, I got excited and wanted to jump in once this started to reverse. That's when I got in. I thought it was going to be a bounce breakdown setup. Bad move, right? We need to wait for the zones, especially when the intraday bias is, and momentum is against us. The bulls were in control, the other markets were in control. We were rotating off the 11125, 1110, 633 major support zone, then going up contextually aligned up into the bearish bias. Do you see how trading is very much like five-dimensional chess? You have to weight the zones in time. It's not just price levels. Anyone that thinks that they can do this and they've done this in under 10 years, I'll shake your hand. I've met Wall Street Ivy League guys that get burned out funds and now go work for the Fed. Complete losers for that. Um, what a bunch of, some of them were great, the real mathematical ones, the frequency trader ones. But even this, they were asking secrets about what we're doing with this daily call prep ahead of time. When we get into the pre-market factors for the trend, beauty principle, they were multiple time frame alliance. I mean, it's not so much I feel like everyone's stealing everything. This is, I could, like I said, I'm posting these rules on the channel for myself and for everyone to follow. They're very hard to follow. Writing them is even hard. It took me years and wait for the zone. Well, I just didn't do it yesterday. I took a loss and missed out on a huge move. It's not just the opportunity cost of the loss on the short. It was the fact that I didn't have the balls to go in again and catch the real move that I had been envisioning and writing about in the channel. This isn't hindsight bias to anyone who's listening ahead of time. Go back into my Telegram channel and read what I've been writing about the last couple of days. These zones make sense. And then today you might say, well, should I just buy at every zone and short at every resistance? Buy at every no, that's ridiculous. Um, the fact of the matter is, I told everybody today at what time was it? 9 something in the morning, not to go long again at initial resistance. Whereas the other couple of days, I told everyone to go long at initial resistance. Why? Because the market context changed. A trader that doesn't understand how to do this would just get crushed, fading zones like a robot. Right? Why did today I tell you not to go long, and yesterday and the day before it made sense? I'm going to get into the discretionary. See, I put a discretionary contextual system into a probability calculation scale with a daily call template that you can actually overlay an advanced system. And as if you're just starting out, you can really fill it out like a robot through a checklist, which I used to do for years. Now I don't fill it out. Please fill it out. I filled it out for years without even watching, screens. You know what I mean? I read. You have to really put in the time before you risk your money. If you haven't been doing this 10 years, this is a 10-year focused guy. I have been doing this full time for 10 years. Well, 9 years. It'll be 10 years this May 2026. So I remember exactly when I started. When you don't have a wife and kid and you're a man, you engender. And I've engendered this skill and this fun from my mind's eye after being robbed by Bill Espenson of the 45th parallel. I'm back, baby. That's why I'm not trading, right? Because my subconscious is invoked. I would have never said that on how many calls to get personal like that. But this is 99% of this is psychology. I couldn't have executed this today. Actually, I did execute this today and told everyone not to trade, right? Because the system said not to. I'll get into the differences, right? So this day, right, started here, and this was not a trend down day, right? And also, even though the intraday bias is down, I'm sorry, even though the larger time frame is biases down due to this balance breakdown pattern, we know that after huge magnitude of move days, you don't just have two trend down days in a row that are that big. It's very statistically low odds. And since we don't know the future, we have to bet on the high odds move, just like the world's greatest poker players play the odds and hands. I've memorized cards and patterns, but now I'm telling you in the futures market. It's the same thing. But then, just like Daisy Duke says, it's more than just knowing the system. You have to have grit, fortitude, an emotional and an intellectual resolve in order to execute this without burning yourself out. That's why you have to live a very monk-like life. And it's been difficult for me right now recently, but that's okay. It's part of the system when you shut it down, right? So anyway, to get back into it, right? So as versus today, this is a trend down day, right? So the bias is intraday bias is bearish. That's against you. The sustained momentum because it's lower lows and lower highs is a trend down day. You had better odds to pop up to the VWAP and short it, but since it was close to resistance and I don't short after the move, right? I wouldn't have done that. What the thesis was that I couldn't execute due to personal whatever, but I was able to write about so the system's intact is that this zone was drawn ahead of time, right? The idea is that you buy here and you short there. That's really simple. But it just didn't happen, right? Because this started top building in front of here, and then as this broke down, oh, what if I miss it? Well, that's okay. That's why I have that mantra: be okay with missing moves that are not part of your plan. I mean, the idea is that what if I programmed an algorithm that would only wait there, that would take out that human element? The problem is that I would have to update this every day because the real time bias is something I got to factor into the daily call. You see, the daily call and the things that I've added to my daily call, like the 10 pre-market factors that increase the probability for a trend ahead of time, and as well as other things like multiple time frame alignment. That's something that preps you ahead of time. But then when the market opens, you have to take in the real time data, right? Which is the sustained momentum and the intraday bias, who's in control of the day, right? So what I'm trying to say is that while after we broke down, it has good odds just to consolidate for a day or two, but then after it hits back up into strong resistance, then the bearish larger time frame bias can then be invoked again, and then that's why I wanted to short last night at that zone, right? And if you did, you made a fortune. And then then you would then take half off at the next zone, which is initial support. Even though it's very sometimes difficult for me to sit through these things, I'm just telling you how the system works. When do you take profits? At the next zone. That's it. And then I wouldn't go all out because the way they got there was trend down day. If I don't want to go long there, then I'm certainly not going to whatever. Because like I said, the leg count, once we popped back up into that daily call, higher time frame bearishness, right? Once we had the moving average, and we're now back into the Fib ratio of this trend energy. Now you might say, and then when this came up here, this is an inverse zero line reject. So I wasn't really excited about the momentum, and we didn't even close on strength. We kind of closed with a little bit of a selling tail. Kind of, oh man, I just saw that and I just couldn't short it. You know what I mean? I just had to just talk about it. In fact, I was so flustered, I was calling long shorts and shorts longs, and just needed to just release that energy because one of the things that you do, like every time you put on risk as a day trader, you feel the same fight or flight response that you get if you like put on that one-time position as a huddler, but you're just doing it every day. Not you don't have to trade every day, but that's the idea. But the one thing that does calm me though is actually just looking at the charts and doing the purity of the analysis, because there's logic and there is harmony and there's beauty inherent in that. So then even though my mind might be scattered due to my external circumstances, the mandala is being spun around like a crazy spin wheel, I can then focus myself using my work to be centered and grounded and be at the center point of that. So that's what the work does. What you don't want to do is then say, I have to execute. Execution is different than doing the work, the analysis, right? Trading just isn't pressing buttons. Trading is filling out your stats, it's back testing, it's doing all the market context and filling out your daily call sheets, etc. So yeah, we saved money today. We're sidelined. We didn't get swayed to go long at initial resistance just because it held the last 2 days because we can read market context well. In fact, we can zoom out a little bit here. Right. So huge move down, right? Markets fall faster than they rise. The trend is your friend, right? And that was the idea, right? And if we go back in time, I also drew the zone because it's very strong as a confluence-based zone on the hourly. You can see, I mean, the real one's up here, right? It's thicker. But given the magnitude of this move and the fact that this was a key swing low here that I've drawn that launched us all the way up to here, and it also held here, and it represents moreover the top of a giant balance where we acted as selling tail, selling tail, selling tail, and then once broken, it acts as support. But now when we go back up into there again, it's acting as resistance again. You could also go back in time and say touch there and touch there, and that's how you just look for confluence on when you zoom out. You won't be able to see also right here, right? It pulled back right here and launched up. That's why I like, even though this is an hourly chart, I'm zoomed out enough where I'm essentially looking at a daily call, right? A daily chart. But what the confluence looking at these zones does is it allows me to see a little bit deeper behavior of how things arrive. So if I look at the daily chart and I didn't, it would just be harder to see a zone here. You see the moving average here, right? The two. You might see the inverse zero line reject, and you might know that this is a balanced breakdown pattern. If I draw a fib ratio, we're going back up into the golden mean, and that was already something you had planned. But it's hard to see that there's a zone here and maybe the top of these things. I just like looking at it on the hourly to just get that added edge. In fact, just because the context is done now, let's remove this and update these charts. I think this is pretty clear. I also think this needs to get out of the way. It's no longer relevant. That was an inverse bigger picture head and shoulders pattern, which increased the probability that we were going to have an up move back in August and July. I'll keep this balanced to remind ourselves that we were in a balanced breakdown pattern. That's why when it popped up here, the idea was to short it because this is one leg down, two leg down sideways, three leg down, and then we will go sideways, and then we'll get maybe a re-entry here in late October, which would then, the added edge is that we'd have a weekly higher time frame. Previous market behavior influences future market behavior. Bitcoin time cycle chart, which predicts in late October 20th that we will have a major turning point and inflection point. And we know that previous market behavior influences market behavior, and previous times it has given us great information. For example, we saw the last major turning point was March 31st, 2025. I kept talking about it and talking about it. We also had a nice double bottom, so the entry was here. Yeah, the next week it moved a little bit against us, but I just said this is roughly around the week of, right? Give me a break. Boom. We go here, right? Time cycle chart. Schlump. Nice double bottom. You use halfway extreme selling buying tail, so you go halfway between the candle body and the low for an entry. Beautiful. And time cycle, bam. We go here, up here. You might say, well, it's an inflection point. Yeah, because it's either going to be a huge reversal or a huge breakout pattern. It's a turning point. Something happened. Boom. It didn't just go sideways for hours or for weeks, rather. And we can go on and on. I mean, um, this was the one that we were really talking about in early November. We know that markets go, when they go down, the next phase is sideways, and then after a extended sideways phase, they go up. It's a larger time frame pattern that Kobe's talked about. So we had that larger time frame pattern that Kobe talked about that was also coinciding with our January 9th, 2023 Bitcoin inflection chart. That's why we were given that signal ahead of time. And when you stocked into that and held and followed my signals, you are rich right now. You've more than made up for the monthly membership. It's you can go back and back test that. In fact, I was so happy about that signal. I made a video about it. That's how you can really position trade. Now, day trading frequency will increase when, versus relative to putting portfolio reloads when we're not at any type of huge golden cross major turning point on the weekly. Right now, it's ambiguous. I think we're going to get a pull to here and we're going to get a sideways action here. Now that is actually an inverse head and shoulders, which is pretty terrifying in some ways, which that's how the people that are predicting the 80,000 thesis uh, are getting that, right? Which would then put us to 80,000 here, which would then be a buy in May. So that would be basically, that's the bear thesis, right? And we'll see how price behaves there. I didn't have a lot of faith in this, right? I felt that this reaction was too early. I wanted this maybe to break down and wash out more, and then to build. The fact that this has not done that and pulled the second leg down makes me a little bit nervous that we could be in for something a little bit stronger than I anticipated, but we're taking it one day at a time. Uh, but as of now, this is still hopefully going to be a reload area around this moving average when we can at least get a nice move up to uh, something of a balance similar to this, even if it does tend to then balance down and we have an inverse head and shoulder bearish pattern. I'm sorry, just a regular head and shoulders bearish pattern. See, I'm a little flustered from the external environment, so I'm saying inverse is up and longs are shorts and having trouble remembering what I did. That's okay. Once the cortisol rises and my hand heals, I am going to see the market a little bit more clearly, at least for execution. I've been calling it pretty well based on just how the system is. Um, Writing it in the channel for people to follow, right? So yeah, that's the idea. Even though it's towards the end of the day, and this might be short-term exhausted, we're clearly just going to sideline right now. If you shorted up here, right, and you took half off up here, right, and you let this run, right, you're either all out at this point or you have a runner. I would keep a runner in if you shorted that and didn't get in early because this is really bearish, huge move down. So at least we took profits on Ethereum, Bitcoin portfolios, and SWI because that was correct process. Yeah, this was a beauty principle sort of mistake that I made. Let's get back into that. Now, what saved me on the signal that I gave for the SWI trade, which was a winner due to the quad exit, not because I had the right direction, was that at that moment in time or something like this, there was a I forget how if it was this day or what day it was, but there's a beauty here, right? Because there's a moving average cross and we had a strong move. Now this moved into it, and for some reason, because this was acting as support, I thought it'd be an inverse beauty principle, so I went long. Yeah, it worked out a little bit, but if I had just thought like, oh, I figured this out and held up to 420 and not take profits at a smaller time frame due to just the idea that it could be short-term exhausted due to the lower time frame double bottom and the beauty principle, I would have lost, right? But that's okay because the quad exit allows us to just reduce risk immediately, not immediately, but at a higher probability target than something that we're just speculating on. So if you just think about it, when we were up here, we broke down and now we're at the same price level and we did break down. So I kind of was maybe not reading that correctly, especially with the bearish engulfing pattern and the double top. It mostly indicated that it was going to be a pause day for another down move, basically similar to what Bitcoin did, where you have a down move, goes sideways, and then you have your second leg down. That's that leg count category that we talk about. So yeah, this is definitely a market that reflects, what's going on in the world very much immensely. Because if there's not capital flowing to the people, the retail is just having trouble paying the rent, and these are not moving anymore, and the institutions are not interested in alts, at least a lot of them. And we might be seeing the firsthand result of the constant scams that have happened with FTX and um, the meme coin scams and Tom Brady getting scammed, Mr. Wonderful, and all these different things, and like LTO now, which no one even knows about that one, but I lost 55 G's in that. Um, this might be the .com cleansing of a lot of these coins. Now, what the ones that do survive may go crazy, and this is just speculation, but we've had some confidence in this coin. But make no mistake about this. Don't fall in love with any of these coins. This thing could be on a pattern back right down to 236. You just have to always be mindful that anything can happen in these markets. So let's not get too we're going to use our principles to get profit, but not fall in love with any creator, project, or fundamental opinion because we've actually kind of want to extract, other than to like find interesting projects to put this strategy upon. We don't want to let our belief in a fundamental analysis or a speculative guru or whatever it may be, a news event, override the purity of the truth of the system because uh, we all can see this now how this works, as difficult as it may be to follow it. Yep. And just getting back from psychology into zone, I have a zone drawn here, not here. I'm not really confident about this at all. The way that this is coming down, I'm more confident about this because there's going to be a moving average confluence here, reversion to the mean. And what is this zone here? This zone is let's go to object tree and we'll use the visible range volume profile. So you can see here, I've drawn these two lines because while this is the one that stands out, this, at least regarding here, is a notable high volume node, right? There's a key swing low here that launched us up to here. And this is the sideways price action. We spent a lot of time. We can just confirm that by using one that we can manipulate more. This is one that's called the fixed range volume profile, while this one is the visible range. So, close enough where, there's a high volume node here It spans at least from May 8th to around July 2nd. And because that's such a big block of time, that is a major key reference area. If we go even further back in time, there's a key swing here, a key swing here, some overshoots and some over. So this is basically the top of a balance now. So at least on first test with this moving average time based, we might get some action like this, but if that sideways action breaks down, then we're going to touch this moving average, which I think will be the reversal point. If we can get down to that major high volume node with this key swing low, that would then you see like what's happening right now. I just want to talk about pattern morphing. This is something that I talk about. This was not part of the daily call template, right? Let's talk about this. So I think you guys should add bigger picture patterns to your daily call, right? We're in an inverse head and shoulder, guys. So I'm pretty bearish right now in the next month. I think we're going to break down to here, right? And we'll have an inverse head and shoulder, which could take us to here. Now, if it does, let's just actually just do this. If it does take us down to here, if it does take us down to there, that is a head and shoulders pattern, which is bearish. But what is it confronting? Especially if this goes sideways. Right. So even though this shoulder, this head, and this shoulder, right, represent a bearish, bigger picture head and shoulders reversal pattern, which indicates that we're going to go down further. When it does get to this key high volume node around 96 to maybe 100, between 100,000 to 96, whatever, around that area, we'll see how it behaves. If it does get there, then that would invoke a pattern morph from a bigger picture bearish pattern to a bigger picture bullish one, which, since the bullish one is larger in time visually, that pattern then overrides the bearish one, and then the bulls can take control again. So at that point in time, you need to have a very active and aggressive disposition to go against your inclination to think that this is going to go lower, because the pattern morph bet is pretty spot on, right? So you would have a shoulder here, a head here, and then this would be the other shoulder. So that's now an inverse head and shoulder pattern, which is bigger than this one here. Why do I think that we could get here, but yet I have a zone drawn here? I think once we get here, we could have some sideways action, and then it could be a target for shorts or some long relief. But depending on how, if we bounce around there and we get a break of that, then it's going to turn into this beauty of the inverse bigger picture pattern that's bearish, that could take us down to here. And if I just like move this over a tiny bit here, and I clone something a little bit like that, this is mid-November, which is close enough to late October, which then would be in alignment with that Bitcoin time cycle chart that we just went over. So if it does get here, that's a long, but because this pattern could be in place, there's odds that this is now, if we just zoom out a little bit so we can get a better picture, breaking this shorter term bounce, one leg down, up into it, two legs down, right? And I'm not thinking, oh, wow, support, now go sideways up. Yeah, relief maybe, but not for a reversal, in my opinion, because this is the pattern that is in play here. Sideways reversal, it could go head and shoulders, then bring us down to this mark, which is a major high volume node, which would then, because it's larger than the other ones, at least invoke some sideways action, which could then create the psychological inverse head and shoulders, which is bullish, which would then override the bearish one we just said, and then we can go up. So that's how I'm seeing it, and I'm measuring that with quantitatively through time. There's no moons, there's no cycles. There, if I have a gut feeling, it could be wrong. So that's why I allowed the gut intuition to at least have two honorary categories in the daily call, or at least Kobe invented that, and I think it's awesome. So you don't let your gut override it. But the number one rule, right? If you are moving, if you are dealing with a huge event, your environment changes, break up with your girlfriend, boyfriend, get married, death in the family, lose your job, blow an account, you have to shut it down because you won't be able to execute the system. So I'm constantly going over the technicals of it, and I seamlessly will blend it with the psychology of it because at this point, you have the psychology. If the market reading skills are there, then the only thing holding everyone back to the next level, including myself, is just improving psychology. Then the more psychology, the better psychology you have, the better the system will be executed. For example, right, Kobe consistently talks about how psychology is representation, right? So how you represent the environment, whether you're cluttered, do you know where everything is, the way that you look at your monitors, that's going to affect your ability, right, to execute the system correctly. So everything's in place. Everything has some harmony. Everything has a grit to it. So what we're going to do is wrap up here. I'm going to obviously load this up to YouTube, and I'll see you guys on the next one. Take care.